And now I would like to introduce our next speakers. We are privileged to have with us today Jamie Forese, the president of Citigroup. At Citi, he has operational responsibility for the Institutional Clients Group, which encompasses the markets and security services business, treasury and trade solutions business, and corporate and investment banking activities, as well as the Citi Private Bank. Jamie and his colleagues at Citi have been addressing some of the most challenging global environmental and social issues, incorporating sustainability into their business strategies. And in fact, at my firm, we've worked closely with Citi on some new ideas in the renewable energy space that we think are very exciting. With their commitment to tackling climate change by financing and facilitating $100 billion in renewable energy and energy efficiency, as well as sustainable infrastructure, Citi is advancing the transition to a low-carbon economy. Jamie will be joined here on stage for a conversation with Ceres CEO and President Mindy Lubber. Toward the end of their conversation, there will be time for audience questions. And since we live in the future, we ask that you submit your questions through the Ceres mobile app. You just open the app, go to the agenda, click on Financing for Sustainable Growth, which is the name of the session, and there you can click on the Q&A piece to submit your question, and that will be used in this discussion. So thank you again, and please welcome Jamie Forese and Mindy Lubber.
Hello again. I'm not sure what that song was. Somebody will have to tell me. Jamie, you should know we spend more time crafting the walk-on music than the substance. No, that's not true. But there's usually a message within those songs, and maybe by the time we leave, we will find out what it was. Thank you. I know that you drove up from Connecticut and actually met with what we all love between Connecticut and Boston, a lot of traffic. So glad to have you here. I'm going to give you some quick context, but this is about listening to you and hearing from you. Over the last day and a half, and through today, there's been great conversation about the role of the corporation and the role of finance in the world to solve the world's greatest problems globally. And nobody thinks your job is to wake up in the morning and worry about every one of the world's problems. But how you factor them in, how you incorporate them into running a business, certainly is something on people's minds. And we should stop speculating about what your role is. We'd like to hear directly from you. How do you think about that? But why don't you just start telling us about how you see Citi's role on the perch of global finance, what's your role at Citi, and then we can dig in.
Okay. Well, thank you, Mindy, and thank you for having me here this morning. It's a real honor for Citi to be partnered with Ceres and with you and with so many people in the room here. It's very nice for us to have this opportunity to be on stage. First of all, I think most people do know that Citigroup is who Citigroup is. We are one of the world's largest global banks, and we like to say that we are the most global of all of the world's banks. We have 220,000 employees, and we do business with customers in over 160 countries. But what distinguishes us from other global banks is that we have employees that go to work in 98 different countries. And that's about 50% larger than other global banks that operate in something like 60 to 65 countries. And those incremental countries in which we operate are entirely in the emerging market. So we have a reach in our banking activities that goes even further than most global banks. Citi is just a bank today. Citi was created 20 years ago between the merger of a traditional bank, Citicorp, and an insurance company that owned a number of other things in financial services as well. But today, 20 years later, Citi is just back to the activities of banking. And we do provide retail banking services in 19 of those countries, and wholesale banking activities in support of public sector entities, the world's largest multinational companies, and global investors around the world. We do worry about actually everything that happens in the world. One of the exciting things about the finance industry, working in it and being president of one of the largest banks, is that the world's problems become our problems, because they're the problems that our clients face every day, and we need to know a little bit about them and learn and engage with them. So these things, we don't necessarily wake up to solve the problems of the world, but helping to provide solutions to our clients' day-to-day activities is what drives us.
What's the evolution been? I mean, there's no question the role of financial institutions are playing a deeper role in environmental and social issues, from announcements you make, from the things you finance. Seems like we've seen some evolution over the last 5 years to now. How have you seen that, and where are we at now in that place?
Well, I think I've been in banking now for almost 33 years, and I think we've seen an incredible evolution of the role that banks play in environmental and social issues today. I think when I first started, I would characterize, all that banks were really focused on was the profitability they could deliver to their shareholders. And we sort of hid behind that our job is, our responsibility is really to our shareholders to drive profits. And that has evolved tremendously. I think if I had to characterize our attitude back then too, when people asked us about issues other than profits, we'd say, we're just a bank. What do you want us to do? We're just here to facilitate economic activity, and if you have a beef about something, go talk to them. We're just the bank. And I think today our position has evolved to say, because we're a bank, let's see what it is that we can do. And because we are the grease that makes the economic system run, there are things that we can do to facilitate or constrain financing to activities when we have a point of view on what should or shouldn't be done. So today, rather than just being considerate of our shareholders, we're considerate of the many constituents that we have. Of course, our clients, our communities, our employees are much more engaged. And I would say, too, our shareholders have shifted as well. I know, we have many in the room here, and because our shareholders have basically asked not to just focus on this quarter's profits or eking out every last bit of return that we can get out of something, to be more broadly mindful of the balance that we can achieve and the other constituencies. We've changed quite a bit. And so you've seen, banks become much better corporate citizens. I'm sure many would like us to do more, and some people believe, many people believe we're overstepping our bounds as a corporate institution as well, and getting involved in things, especially in this current, political climate, that we're getting involved with things that we have no right to be involved in. So we're trying to strike that balance now amongst all of our constituencies and be responsible, a responsible entity within society today.
So let's follow up that a bit. What are you most proud of where you've been able to continue to evolve? And what are some of the complicated issues you're struggling with?
Well, we aspire to be good partners to organizations such as Ceres, to the institutions here in the room, and we really want to be seen as leaders, certainly amongst banks, but I think in the entire corporate community. So some of the things that we're proud of in the past that point to both leadership and good partnership were the Equator Principles. We were one of the 4 founding institutions back in 2003 to pen the Equator Principles. In 2015, we announced our pledge to finance $100 billion worth of environmentally related projects and works. We've achieved about $57 billion of that goal today. Last year, we announced that by the year 2020, we would be, all of our energy needs as a company would be entirely driven from renewable sources of energy. And so in the sustainability space, I think those are the things that we look to. But it's evolving, and we want to remain as leaders. We want to be engaged with people and try to stay at the leading edge of this and drive not just what we're doing, but really drag other institutions as well. I think there's other global banks as well that are strong voices for sustainability and citizenship. And as a group, we'd certainly like to keep pushing the agenda forward. I don't know what's coming next and where we have to go, but the challenges certainly aren't getting any easier for us to navigate.
Well, we've certainly talked a lot about that. The challenges are most definitely not getting easier to navigate. We all wish they were. On the financing side, the space of a city and so many others, and we certainly love seeing you set goals and have others follow, and moving an industry sector, not only one company at a time. Let's talk about the risks and the opportunities. Start with the risk, then we'll go back to the $100 billion commitment, which indeed was important, valuable in making a difference. On the risk side, we are seeing the economics of a fossil fuel future certainly look very different than they did 10 years ago, whether it's coal or some of the other fossil fuels. Citi, like so many others, have stood up and I think quite proudly and boldly said, we need to get to a 2-degree world. You were one of the companies early on to say, we need to stay in the Paris Agreement, it's important. It is about the future of our economy as well as our families. And we know it's not going to be easy to get there. As I said to you just as we were walking in, you and I as bankers or lawyers don't know precisely what a 2-degree world looks like, but the science is clear. And it's almost a non-fossil fuel world, hard to get our heads around. How do you think about the risks of your investments in high fossil fuels that necessarily take us in the wrong direction? And then I want to come back and talk about how that $100 billion commitment is getting managed and where it's going.
Yeah. Well, we're not an investment manager, so we don't have, strictly speaking, investments in the fossil fuel world. But today, part of our livelihood is driven by the activity in the fossil fuel world, and our customers are energy companies today. And so it is, we do have a stake in today's, I'm not going to deny that we don't benefit from today's economy. But we've got to find a way to transition to the future. And I think it's inconceivable to me that you can just shut off the fossil fuel economy today and begin a sustainable world tomorrow. The question is the pace at which we get there. If we move at a fast pace, but not an immediate pace, in other words, turn the switch, the bank and every bank will be fine. Because our customers change. As one industry declines, another industry evolves, and we will continue to bank the world's industries. So we don't fear a future that looks like that. I think for us, we just have to try to find the balance and the pace of how we go about transitioning to the way the world needs to look like in the future. I know we get criticized all the time, of course, for our involvement and the continued involvement in financing of coal and of financing the oil industry. We are working hard to try to get those industries to change and to try to get them on a path towards decline or elimination in the case of coal. We've announced targets to reduce our own exposure. We've told our customers in the coal industry that we are going to be steadily providing less and less financing to their industry. So we've given them some time so that they can transition as institutions. If the institutions go away, that's okay as well, because as they're doing that, we're making a commitment to other industries in sustainable energy that we believe we will grow with. So we're excited about that. And we don't feel that, when we get into this discussion with people about moving fast enough, it isn't about our trying to sustain our own profits. Our profits come from the industries of the world. And it's the faster that we can make that industrial transformation from a fossil fuel world to a sustainable world, that's okay with us, because we're part of the one and we're going to be part of the other.
A big part of our discussion over the last day, and folks know, is about scale and pace. So it makes perfect sense to hear what you say, but we need more scale and pace. You all have made a commitment to $100 billion to help spur, build, finance the clean energy future. What's that looking like? Is there real buy-in at the bank? Are the numbers real? I'm sure you didn't make the commitment if the numbers weren't real. But change isn't always easy. How is that moving? Is it moving apace? Yeah. Will you get to that goal?
Well, I think we will. The numbers, are real. It's we sometimes get criticized for the goal, saying that, well, how much of your, how much of your goal is really the path of activity that you're already on? Are you really moving at a faster pace? And so we get that question a fair bit. Say, again, it's around scale and pace. We do think it's a more aggressive target than what the ordinary path would be. We think it's a realistic path, but it is a reach. It is a stretch. We think that goals should be stretches, but at the same time they need to be credible. If we were to set a non-credible goal inside the bank, people would just turn their backs and say, that's a bit of a joke. We'll never get there. But if we can identify a goal that we think is credible within reach, then we have a lot of people working towards it. I think internally, it's a source of good pride for our employees that we have something to shoot for. As I said, we're a little over halfway to that goal now. I think when we start getting closer to it, we'll probably reset it and move the bar even higher. I think it's important externally as well to have a goal and to show people what we're aiming for. It's attracted a lot more inquiry into the bank from people that have ideas, that they recognize us as a potential financing partner to them because we've set the goal. And we look forward to finalizing the goal and then setting even higher targets.
Specifically, and we're not looking down to the investment or what you're financing, but where are the biggest chunks of that $100 billion going?
Well, they're spread out. Some of it is there's a lot into renewable energy projects themselves. We're doing things with cities themselves, helping cities adopt more sustainable infrastructure. There's projects related to water. It really spans. I think we struggled a little bit to what to call it, and so we just called it environmental finance with a $100 billion target because it does encompass so many wide-reaching activities. I think one of the things that we're trending towards as well, and not necessarily costing us money or financing money, but is becoming more into citizenship issues overall, and we're getting drawn into that direction as well. So we can, we like to expand the definition of it, and I don't think we're being cute with it either. I don't think we're putting things into the environmental finance bucket that people wouldn't agree belong in there. But when people find things that are truly good for the sustainable future, we're happy to add it to the list.
Right, and you should, whether it's sustainable transportation. If the world is going to be 50%, some here say 80% or more, electric vehicles by 2030, a lot of financing is going to have to get us there, a different transportation model. If some of the innovation is going to cost billions of dollars, whether it's transportation or any other sector, your role in catalyzing that will be crucial.
You make when you mention electric vehicles there, it gets back to what I was saying earlier about the shifting nature of industry. Right. So General Motors and Ford are big customers of the banks, but so is Tesla. And if General Motors and Ford don't change and adapt and continue to make combustion engines and only combustion engines, then they will very likely see their businesses decline. And that, as their businesses decline, that will mean that the business that they do with us declines as well. But meanwhile, the Teslas of the world and the industry that is dedicated to making cars that are part of a sustainable future will become bigger customers of our bank and other banks. And so we don't we don't have that stake in the old economy, the unsustainable economy that some people think.
That's beyond great to hear. We'll all continue to push, and that's our job as advocates, but as partners, to have yet the bigger stake in the economy of the future, because it is coming. Whether it's here in 2030 or 2040, nobody's crystal ball is perfect. But the change in the economy is so clear, so palpable, is coming, and has to, if we're building a future for your kids, for our grandkids, and so on. So keep pushing. We'll look forward to that $100 billion growing into $200 billion, and no doubt that you will be out there in the lead. You all have stood tall on policy, and let's talk about Paris for a minute, although you've been in the news on a few other investment thoughts that many of us thought were terrific and took a certain strength and a clear sense of purpose of your corporation in setting that. I would say that when you did, and I referenced it a minute ago, when you did stand up with some of your colleagues and say supporting the Paris Agreement is an imperative for the future of our economy as well as the future of our world. It was a little bit of a deviation. It wasn't, Citi doesn't stand up on every climate or environmental or social issue, but clearly you felt compelled to do that. That's a change. What drove that?
Yeah. Well, first of all, on Paris, I want to announce that we are joining We Are Still In, and But what Mindy was referencing, though, was the letter that our chief executive signed, which was, I don't know if it was the first, but it was an unusual and to some degree an uncomfortable position for our CEO to take, for our board to support, because it involved something that was very political and even counter to what our own administration was proposing. I think that's a little bit of the sign of the times today, is that companies are being asked to take stands, are willing to take stands, and the hard part is going to be to know what to take a stand on and what not to take a stand on. And we wrestle with that. I think that one was easy. I think we felt very strongly that speaking to that it involved all of our constituents. We believed all of our constituents are aligned in that, and that it would be beneficial for our broad constituencies. By that I mean our customers, our communities, our employees. And when we see great alignment like that, we're very willing to step out.
Well, I got a hint just a minute before I walked up on the stage that Citi was going to join We Are Still In, which is a statement. It is a message. It is the corporate and financial community supporting staying in Paris and what that means in building a future. That is having an extraordinary ripple around the world. As it grows, we're now at about 1,800, but other banks, other financial institutions, following that help send the right message, that whether the United States is in on a formal signature or not, getting to that goal, bringing the parties who can help us get there is an extraordinary statement. So not only thank you, but I want to make sure Jamie doesn't leave empty-handed. We'll make sure he's still wearing, like so many of you, the We Are Still In pin probably every day at Citi, or at least as he leaves here. Let me provide one more. We've got We Are Still In M&Ms. You know we're not terribly commercial. We are
Those
modest,
I'll definitely take.
But Jamie, we are still in M&Ms, and I think we have Mars to thank or whomever, but enjoy them, and let's hope it gives you strength to get through the many challenges that you face.
I'm going to need more M&Ms than this, though.
We might need to deal with that. We'll work on it. You recently, and this is not in anything we discussed, but since it was in the newspapers and many of us took note, took a position on certain weapons. And no doubt you're hearing from all sides, but I do want to say from this side or from this person, I can't speak for 600 people in the room, and that's what makes this a beautiful room. We have lots of differing opinions. But standing up and making a statement about the horrific lives lost through having a position on certain weapons, I thought was a clear sense of leadership and speaking up about your role in using your clout. So I, for one, thank you. I don't know how you're seeing it.
Thank you. You know, our firearms policy, which is not about sustainability so much as it really is about just citizenship, we announced that we would no longer provide banking services to retailers that did not adopt what we felt were best practices in the sale of firearms and ammunition to the citizenship. That was to not sell bump stocks or high-capacity cartridges, to only sell guns if there was an affirmative background check, something called no check, no sale, and to restrict the sale, to adopt some type of restrictions on the sale of firearms to people under the age of 21. We were the first bank to announce strong measures like that. It has been quite controversial.
I bet.
I think to those of us at the bank that were supportive of it, I wish we could do more. I don't know that those measures will do much to deal with the issue, but it was something that we felt was was responsible and sensible without impinging on the rights granted to Americans underneath the Second Amendment. We are not taking a position that people under the age of 21 cannot or should not own a gun, but just that they shouldn't be able to walk into a store and buy one without some further form of identification or check or something like that. We did not want for the ban of sales, just restrictions on that. For instance, one of our partners, Orvis, had announced that they won't sell, they only sell shotguns, but they won't sell shotguns to individuals under the age of 21 unless they have something called a hunter safety certification. And so a further example that they're selling guns to responsible members of our community. So I don't want to go into too much about guns. It's not on the topic of sustainability, but it is one of those things that firearms is one of those things that corporations now are being asked to take a stand. The retailers themselves were pressured by a lot of groups, including many of their shareholders, to adopt policies around the sale of firearms. Then the banks, again, because there's something that we can do. Hey, we're a bank. Because we're a bank, what is it that we might be able to do as well? And so we were asked to try to adopt policies as well that might further that. And that's where we find ourselves today.
Look, I'm going to ask one or two, and then we'll take a few questions from the audience. But a very clear message of what we talk about, what we work on with the companies who are partners and investors, is corporate purpose. It is corporate value, who you are and how you stand and what you stand for as a company. And so whether it's narrow sustainability, broader corporate responsibility, and we know you're asked to stand up for a lot of things, but choosing issues and standing up when it's popular or not. And I could imagine you were getting phone calls, pressure. We all live in the real world. And you knew that when you did it. Nobody is silly enough to think you didn't understand the consequences. Standing up for what you believe in purpose, I think, is admired, and hope will serve the company as it is. As you know, Larry Fink, and nobody is here saying BlackRock is perfect, but certainly in some of his letters to his shareholders, as you've seen and we've all read, society is demanding that companies serve a social purpose to prosper over time. Every company must not only deliver financial performance, but also show how it's making a positive contribution to society. I think what you just did on guns, I believe I saw some commentary on immigration. Some of the things that you have stood for seem to only affirm that trend of corporations are not so narrow as to only look at what their quarterly earnings should be over the next quarter.
Well, I think Larry Fink is absolutely right, and they are the largest asset manager in the world, and so for many large public companies, they are the largest shareholder and the largest owner. They can do a lot themselves by pushing, saying this is what they want, or what in their instance, what we want as owners. We don't want you to be narrowly focused on one quarter's earnings. We want you to be more considerate, in addition to making money, because he does say in his reference, in addition to earning a good return, you have to do these other things. It's just going to become a broader definition of responsibility. So a great company will earn a good return on capital, and it will be socially responsible, and it will consider its actions and what it stands for on the greater good of society, not just for today, but into the future for our children and grandchildren. And I think that's terrific. I think we should be judged that way. There are still some shareholders that want those narrow returns, but we would like our owners to be more like Larry Fink and minded like that. And if we can do that, then we can all focus more and more on those other parts of our business that go beyond. It's not if we don't earn a reasonable rate of return, we will go out of business.
Absolutely.
So we need to generate an attractive rate of return and do all those other things as well. If we don't earn that attractive rate of return, we won't have the opportunity to create good in the world today, or to be a voice for good in our society today.
So just to follow up on that a little bit, and then I am going to turn to the audience. A lot of your owners are in this room. I mean, we just talked about Larry Fink, and 10 or 15 of the largest institutional investors in the United States are in this room saying, and they have their own pressures. They've got to get legitimate returns for their pensioners who are counting and depending on them. So they're not looking to invest in a company that's going to do poorly next year and turn around and say to their constituencies they're not succeeding. But as we look at the corporation over quarterly earnings, which sometimes drive the most narrow possible view, and a slightly broader societal view, without suggesting you ought not to do what you're there to do. How do we wrestle with that? What are the changes that have to be made? Who do you need to hear from? Are your asset owners speaking up? Are other constituents speaking up? Do your consumers tell you that they want to see A, B, C, or D? I mean, it is part of an evolution. We want to help hasten that revolution in a way that helps you get to where you just said you'd like to be, able to factor those environmental, social issues into running your institution.
I think it's a little bit of everything. You know, we have to make progress. We have to move people's opinions. We have to shape opinions in every segment of the world today, literally every part of the world. And so one of the things that the people in this room can do is continue to spread the influence that you all have. If you're an investor, spread more of your influence into more of the companies in which you have a stake in. For the advocacy groups here, extend your networks. I thought it was terrific to see just how many new partners Ceres is bringing on board into so many different things. The more people know, the better educated people are. And I think in particular, the more that we can involve and engage the young generation today. I am a real optimist about the millennials. And I don't think it should be one generation against the other. This shouldn't be the millennial generation against our generation. This is us trying to find out. We may be in positions of decision-making right now for the next generation. They need to work with us to tell us the type of future that they want for themselves, for their children and their grandchildren, and engage with us. And I think we can get there. So the more active we can get people, rather than just being critical, but the more engaged that we can get people to find constructive solutions, the better off we're going to be in all facets of life and in all facets of society in every country in the world.
Great. Well, we're seeing all the right signals from those millennials. Sometimes they don't like to be lumped. My kids are right in those categories. But they do care about these issues. As consumers, they're going to show they care, and as employees and future employees. We're all looking for the best and the brightest. I think to get them, the kind of leadership you're talking about will be important, and we're putting some pressure on them, but that's okay. Let's take a few questions, maybe even one or two from a millennial. Dan, you're getting them from the app, correct? You're almost a millennial.
Yeah, barely. Great, so it's Dan Siccardi with Ceres. We've gotten a lot of great questions from the app, and so apologies if we don't get to all of them, but wanted to ask the ones we can. We've touched on the investments that Citi's making as part of the $100 billion. One question was specifically about how you can use that to accelerate investments, particularly in emerging and developing countries as it relates to clean energy or renewable energy. Can you speak to that?
Yeah. As I said at the start, one of the distinguishing features of Citigroup is our reach into emerging markets. And that pool of capital that we described is not specified to go to any one country or any one region. That is open to any use anywhere in the world for an environmental purpose. We do see a lot of inquiry out of the emerging markets. Obviously, their infrastructure is growing rapidly. In many instances, their growth rates of their economy are one of the things that are putting a lot of strain on a lack of sustainable activities. We don't see a problem necessarily with the demand, the ideas. We see lots of ideas. What we find the challenges are finding the solutions in the capital markets, or to be able, not just as we finance or we provide the financing or arrange the financing, to find end investors for that. We can arrange the bank loan financing, but quite often we have to find equity investment or other sources of debt investment to make projects come to life in the emerging markets or anywhere. And I think that's where we also spend a lot of time and energy beyond just having the money available and having that goal, is working to develop capital markets, working with investors as well to see if we can structure projects in a way that they can get a necessary commercial return on the capital that they're going to deploy into those projects.
Great, thank you. I think we probably have time for a couple more. There is another question about the transition to a low carbon future, and though we're all aiming for a 1.5 or 2 degree world, there's also potential reality that we don't hit that. And then the question is, to what extent is Citi thinking about the negative impacts for your clients on some of the more extreme elements of climate change?
Yeah, we've been doing a lot of analysis around the way in which our client base will change and the way in which they will be affected in the future. And if we get to the kind of world that we envision, that we hope for, that will mean that some of our clients' industries are going to face dramatic decline. We think that they can navigate that, given that they've got time to adjust, and consequently then the impact that it'll have on us and other banks will be very manageable as well, because as I was saying earlier in the Tesla example, as one industry declines, another industry is born. As the fossil fuel industry, as the oil industry faces a decline in light of a more sustainable world, the renewables energy industry will be growing rapidly to take its place, and so that will be a source of new clients. So I think the banks will be fine. Not all the industries, that will be fine. We don't want them to be fine. In effect, that's really what we're saying when we talk about a sustainable future, is that some of today's industry has to go away. But they'll have to, those industries and the companies that own those industries will have to figure out what their future can be. And many of them are trying to adapt themselves from a fossil fuel dependency to a renewables future as well.
Dan, let's take one more, and then we'll see if we could wrap and put some summary and ribbon on this.
Great. And this question may perhaps lead a little bit towards that, but one question we got is that everyone in the room has been inspired by what we've heard both this morning but also yesterday. But at the same time, this is a room full of people who understand these issues and are sustainability advocates. So the question is, how can you take the messages that you've heard here back to Citi and to the broader audience within Citi who may not be steeped in all of this?
Yeah. I mean, inside of Citi, we do a lot of promotional advertising for what it is that we're doing. So to our employee base, which is getting younger, which is shifting, that is asking the company to be more engaged and involved with these things, we're making sure they know what we're doing. And we're also open to ideas. So when we leave here, we'll go back and we'll talk about our participation here at the conference in Ceres. We'll put that on our websites. I think we're probably even tweeting about it over the last couple of days that we are here. We spread the word that way. We're trying to let as many people in our company know what we're doing and why we're doing it. And I think that everyone here can go back and take that to their own communities, to their own organizations, and try to just continue to spread, cast the net even wider than what we're doing today is one of the best things that we can do.
So let's see if we could wrap that. There's no doubt everyone in this room is challenging each other, themselves, you, and there are people here from multinational companies who all have the same challenges. They've got to go back and they've got to think about how do we scale, how do we get bolder, how do we get better. My walk-on music, just to show we really care about that, was Sarah Bareilles saying you got to be bold. And we've built off of scaling up and being bold. It will take a lot to get to a sustainable future, to meet the world's sustainable development goals, to deal with the kind of problems we face. The burden is not singularly on Citi or finance, it is on every one of us in this room. Our message, and you not only heard it, you're acting on it, is with all that we're doing and how quite impressive what you're doing is, we've got to go back, we've got to think about how to scale up. And I know you're doing that, but that's all of our charges. The fact that you've stood up on clean energy, the fact that you stood up on weapons, I would argue, the fact that you are standing up on one of the most important global partnerships of the world, and that's the Paris Agreement, and stating you are still in, that is a great start. We're on a journey, we're not there, but we'll look forward to getting there with you. Thanks so much.
Thank you. Thanks for having me. Thank you.